Warren Buffett's stocks are the topic of today's presentation. And if you're somebody that's invested in Berkshire Hathaway, or you're curious about which stocks Warren Buffett likes the most, then you'll want to watch this presentation. Now, Mr. Buffett here doesn't log into his Robinhood account every morning and ape into whatever stonk is trending. He takes a much different approach to investing that refers to companies, not stocks. We always say, we don't invest in stocks, we invest in companies. And our partial ownership for any company is always represented in stock. Well, Mr. Buffett, he often buys all the stock in a company and then owns it. And the holding company that he manages is called Berkshire Hathaway. And it's said that Mr. Buffett personally oversees all investments of Berkshire Hathaway over $1 billion. So when you look at their website, they keep it very simple. You can see here that the various quarterly reports are published on a very clean page, and the annual report is always worth a read. It's quite entertaining, and it teaches you quite a bit. Now, Mr. Buffett is notable because he's on the top list of billionaires here. We can see that he who shall not be named is at the very top and has been cut off. And then in fifth spot is Mr. Buffett. And he's unique in this list because he's accumulated his wealth through successful investments. So when we look at what Mr. Buffett has invested in, we're going to keep it simple as well and try to answer the question, what companies is one of the world's most successful investors holding and why? So we look at Buffett's equity investments. It says here, this was taken from his last annual report, our long-held acquisition strategy is to acquire businesses that have consistent earnings power, good returns on equity, and able and honest management. Some of these things are objective and some subjective, but what we're going to filter these companies on is we're going to not look at firms that he owns outright, but instead look at firms where he owns stock in publicly traded companies that are also accessible to retail investors, so relevant to retail investors. Now, when you're looking up which stocks Warren Buffett holds, you can go into their annual report, and here under assets, you see where it says $353 billion in equity securities. Well, that ties into the table below, which shows these broken down with the cost basis and unrealized gains. It's rather interesting. And he's broken these into three groups: banks, insurance and finance, consumer products, commercial, industrial, and other. But what we should note here is that approximately 78% of the aggregate fair value of the stocks that Berkshire Hathaway is holding that are publicly traded are in just 5 companies. That's what we're going to look at today. So CNBC has this Berkshire Hathaway portfolio tracker that's kind of handy. We pulled it up here, and we can see the top 5 stocks there that we're going to look at: Apple, Bank of America, American Express, CocaCola, and Chevron. Nearly 3/4 of Mr. Buffett's stock portfolio is in these 5 companies. Now, the latest Berkshire Hathaway meeting, these are always rather entertaining, saw some comments from Buffett and his right-hand man, Charlie Munger, who are wary of bank stocks and bearish on commercial real estate. So that's interesting to note, given that he's holding both Bank of America and American Express in his top 5 holdings. They're downbeat on the U.S. economy, and some names they discussed in their meeting, Apple, and that's what we're going to focus on today, and Occidental Petroleum, which is related to their investment in Chevron in terms of Buffett being bullish on oil prices. So in 2021, Mr. Buffett referred to the 4 giants, a list of 4 main areas that he's invested in. So the first is a cluster of insurance businesses. And if you know anything about Buffett and how much he likes the insurance industry, then that needs no further explanation. The second giant is Burlington Northern Santa Fe, the largest freight railroad in the United States, what he calls the number 1 artery of American commerce. Then in third place would be Berkshire Hathaway's energy holdings. He describes this as a utility powerhouse, no groaning please, and a leading force in wind, solar, and transmission throughout much of the United States. Sounds very similar to NextEra Energy, a company that we've been holding for quite a while. Then there's Apple, and it's interesting to see Apple as one of his four giants. It's 20% of Berkshire's market cap. So whilst we can look at that table and see that it's somewhere around 45% of his total stock portfolio of publicly traded stocks, that portfolio is a fraction of Berkshire's market cap. So when you look at it from the aggregate, Apple, the investment, makes up about 20% of Berkshire's market cap. He makes some comments here when he would take his grandchildren to an Omaha Dairy Queen. He also owns Dairy Queens, rather interesting. He said that he owns them because of primarily he has a lot of respect in the management team, because we were curious why he was holding Dairy Queen. He said when he would take his grandchildren to Dairy Queen, they would be glued to their iPhones, and he seems to make observations about people's response to products and use that to make investment decisions. And the most recent Berkshire Hathaway meeting, he said, "It just happens to be a better business than any we own," underlining how indispensable the iPhone and other Apple devices are to consumers. Brand power seems to be a running theme with Buffett, and resilience. So he says here, if they had to give up a second car or give up their iPhone, they give up their second car. So it's resilient to macroeconomic headwinds, he believes. He built his position in Apple between 2016 and 2018. And he said here, I think I know where Apple is going to be in 5 or 10 years. I don't know where the car companies are going to be in 5 or 10 years. So this company is probably worth a deep dive in the future. We haven't done that in a video, so stay tuned for that. In second place is Bank of America. This is his largest bank stock investment by a wide margin. And back in 2011, during the U.S. debt ceiling crisis, he plowed $5 billion into Bank of America to purchase preferred shares paying 6% dividend. Buffett, it says here, and Bank of America both said he made an unsolicited call to the bank on Wednesday morning this was back in 2011, to make an investment, and he told CNBC the idea came to him while taking a bath and the deal was done in 24 hours. So this man doesn't mess around. That deal also included warrants to buy 700 million shares of Bank of America common stock, which he exercised. He now holds over 1 billion shares. He's since trimmed other financial holdings, but not B of A. So most of this investment that he holds today originated from seeing opportunity in crisis, and that's one of the circumstances surrounding his entry into CocaCola, which we're going to talk about now. The next stock on our list, American Express, he first started investing in them in 1991. He hasn't purchased any Amex stock since the late 1990s, but his stake has continued to increase as a percentage of total shares as a result of stock buybacks. He now holds over 20% of Amex. He was worried about credit card bank exposure during the Rona and exited some positions but held Amex. And that stems from his belief that higher echelon clientele are resilient to recessions. He once told the company's CEO the most important thing about American Express is the brand and the customers that aspire to be associated with the brand. My experiences with American Express, I worked with the company during my MBA, a several-month-long project in which we went around Europe and queried their vendors to learn more about what they were looking for from Amex. Long story short, what I learned about the business is that they have a closed-loop business model, which is quite interesting. And then when I went into corporate, I realized that having your own company Amex card is quite a status symbol and something that you want to aspire towards. The main source of revenue for Amex is discount revenue or fees charged to merchants that accept its cards. And I think that this slide here does a great job of highlighting the competitive advantages of their business model. You can see the closed loop here. And of course, highlighted there, this slide is listed out 5 times in their latest investor deck, and they highlight and talk to each one of these points. The first being the brand strength that Mr. Buffett spoke of. Now, CocaCola is another classic Buffett investment. 25% of his caloric intake is Coke. And Coke isn't just Coke. If you travel around the world in different countries and you figure out what their favorite drinks are and you start to drink them, turn that bottle around, look on the back, and lots of the time you'll see that it's Coca-Cola producing these brands that you've never heard of. Coca-Cola recently announced a 4.6% increase in their quarterly dividend to 46 cents per share. So that's probably keeping up with inflation. It's not the biggest increase, but that was the 61st consecutive year that Coca-Cola has raised its dividend. Mr. Buffett paid $3.25 a share, and that means his annual yield, what they call yield on cost, the yield he's receiving from his original investment, is around 56%. So every 2 years, he recovers his entire investment and more. And back when he invested in Coca-Cola in 1990, he originally started investing months after Black Monday in 1987, so again, seizing opportunities. And in 1990, that represented up to 40% of his portfolio. I like what he says here. The best time to buy is whenever you have money, and the best time to sell is never. And this paragraph here at the top is quite interesting. You can pause this and read it. I'll summarize it, and it simply says that investors look at Coca-Cola and think its time is past, and it always seems to surprise them. That was written by Fortune in 1938, and it couldn't be more true today. We thought the same thing when we invested in Coca-Cola over a decade ago. Berkshire has more than quadrupled their position to 100 million shares by 1994, and to this day hasn't sold any. You see 400 million shares, that reflects stock splits by Coca-Cola. It still sits on their books today, that original investment. What a success story. That brings us to Chevron, and this is the most recent in the top 5 investments that Buffett has made. And here you can see, we should all recall in the Rona crisis that oil actually dipped into negative prices, so people were being paid to hold oil. And you can see that dip reflected here and highlighted in yellow in the top chart. And that band there in yellow is the year 2020. And then the chart below that, that's Chevron's share price in 2020. And Mr. Buffett made a move. He's jumped in and out of Chevron, and you can take a look at the trades and see that. But the point is, and some say he sold Chevron shares to move more into Occidental Petroleum, but the point is he's bullish, and he just doesn't move into a position and then exit quickly. So he's long-term bullish on the price of oil. I just pulled up a couple slides from Chevron. I can recall when the price of oil was crashing and I was looking at oil companies. I think we added some Exxon around then. Not sure if we added Chevron, but there was a concern, right, when the price of oil was bottoming out. And I remember looking at a Chevron investor deck, and the first slide of that said dividend. That was their number one focus, was to assure investors we're going to continue increasing our dividend over time. And they can do that because they can leverage debt. And here you can see an interesting slide that shows their annual buyback guidance. Buffett seems to be a big fan, mentions it often, of share buybacks. And on the left here, you can see downside potential there. You see how small a component is of the cash they're generating from operations in terms of where it's going. Then you have CapEx, investing in future growth, and buyback capacity. On the right side, you see upside potential. This is something like, I think on the left-hand side, $50 a barrel per oil. On the right-hand side, the upside is $80. And they're retiring 3 to 6% of shares outstanding per year, so your percentage ownership in the company goes up when they're doing that. And then I liked this slide here. Again, they say financial priorities unchanged. Look at the top. Maintain and grow dividend. Love that. And we love seeing our checks come in every quarter from Chevron. And we're also invested in Exxon as well. Those are 2 oil companies that we hold as part of our dividend growth investing strategy, Quantigence, which has 30 total stocks. Now, other stocks Buffett owns, I wanted to touch on this. Always put into context the size of the bet. So don't ape into what active managers do, because you want to be making your own investment decisions. And when you look at what an active manager does, consider the size of the bet. And Amyris is a great example. It's a SynBio company we warned investors about years ago. They went bankrupt. And a lot of cheerleaders came around and chastised us for daring to insult their sacred cow. And they would always point to John Doerr's controlling stake in Amyris. Well, when you looked at the amount of money that this gentleman had, let's say, bet on Amyris versus his total net worth, it was just a small fraction. So always consider that when someone's invested in a stock that you're holding, that isn't necessarily that bullish of a signal when you consider how much money that accounts for in their total portfolio. I put up 3 examples here. These are popular stocks Buffett holds and their relative exposure. So let's say you had a $10,000 portfolio and you had the same amount of money that Buffett has allocated to StoneCo. That means that $3.46 of that portfolio would be StoneCo shares. For new holdings, it would be $23, and for Snowflake, it would be $28. He owns under 1% of all these companies, and it's a very small fraction of his total portfolio. So be careful about people that point to Warren Buffett and say, well, he holds this stock, and therefore we should be bullish on it. The whole idea of today's presentation was to look at why Mr. Buffett invests in certain stocks and to try to learn something. And one thing, if you take away from this presentation, it should be this. In conclusion, Mr. Munger, again, Buffett's right-hand man, says, it's so simple to spend less than you earn, invest shrewdly, and avoid toxic people and toxic activities, and try and keep learning all your life. If you do all those things, you are almost certain to succeed. And he's described more or less what we do here at Nanalyze, the ideas we promote, living below your means, taking a risk-averse approach to investing, and avoiding cheerleaders in this whole idea of stock trading, and most importantly, learning from our community. And we're always continuously learning and refining our investment strategy as we go along. So I'm going to put up another video here that you might be interested in. Before you watch that, please click the Nanalyze logo on the right, subscribe to our channel. We don't run ads, support our work. Thanks for taking the time to watch this today.